The big news this week is that fintech giant PayPal is looking to buy out Pinterest in a $45 billion blockbuster deal. This would put the share price for Pinterest stock at around $70 per share, which when this news leaked was a 25% increase in the share price. So on the surface, hey, this could be a good deal here for Pinterest and for PayPal shareholders, right? Well, maybe, but in my opinion, not quite. And there's a few red flags that I think I need to bring up in this video. And if you're a shareholder of either of these companies, you need to pay attention to this video because it'll kind of determine whether it's worth holding these stocks going forward, because this is a big fundamental shift. Now, full disclosure, guys, at the time of this recording, I do not own any stock in PayPal or in Pinterest. However, I do have some option plays open here in PayPal, kind of taking advantage of the short-term volatility, so we'll see how that plays out. And guys, if you appreciate this video with my insights on this, hit a thumbs up. I'll create more videos like this if that's the case and you guys find value in it, because it's something that I research regardless whether I create a video or not. And I figured, hey, if I'm going to spend time doing this, maybe others will find it useful as well. So firstly, we look at Pinterest stock here historically, and this stock was trading at a $90 per share price tag just earlier this year and has since dropped to a low of $50 per share in recent weeks. So the first reason this deal may not be one that Pinterest investors specifically want to see is because all the investors that bought into Pinterest above $70 per share, the supposed takeover price, would end up being underwater on their investment. If you bought, say, in like the 80s or close to $90 per share, which is pretty much near the top, and this deal goes through, you're pretty much stuck. You have to lock in losses in that case. And that's not fun, because if we're long-term investors, you know, short-term price volatility, sure, stocks drop, you take advantage of that. And then over the long term, you expect it to recover and do much better. But with this buyout, it kind of eliminates the option for the stock to ever recover. That means theoretically, some investors will lock in close to a 30% loss here, which is it sucks. And the worst part, like I said, is that the decision to lock this in is not up to you. So in my opinion, I think first and foremost here, PayPal is snatching up Pinterest if this deal closes at a pretty good valuation. If you're looking at Pinterest as a business, what they do, you know, their results, all that kind of stuff, it seems like a pretty good valuation here for what it's capable of in the future. So needless to say, I think PayPal is probably getting the better end of this deal here. Now, next what I want to touch upon is, again, Pinterest related, and it's some news that came out last week. And at the time, it was kind of like, this is an odd move to see, but now it's starting to make sense. So one of the co-founders of Pinterest, Evan Sharp, actually stepped down last week from the business that he helped create. In a statement, Sharp said that it was a tough decision, sure, but he wants to move on to grow as a designer and product builder. The question I have is, why couldn't he just stick with Pinterest and grow with the business that he created? It doesn't really make a whole lot of sense to me that he'd move to another company when, you know, he's already has so much success here with Pinterest. So it didn't really quite add up to me. And when the news broke last week, there was no context around it. Just like, oh, he stepped down, he's moving. Everyone was like, oh, okay, it's probably a non-event, probably moving on to other things. But now that we know that this merger is possibly taking place, a lot of stuff makes sense now. There's probably some disagreement. He probably didn't like the move here that PayPal was trying to take them over. The other co-founder clearly is happy with selling the business because there are talks, advanced talks at that too. So, you know, Sharp here is probably like, you know what? I'm just going to bow out here. I'm going to call it quits before all of this is leaked out to the public. And at least that way he gets out on his terms before everything else is released, as opposed to PayPal is acquiring business and now co-founder steps down. That would have been too obvious, so at least he left a little bit of doubt in our minds. So to this, I would say that it's always concerning when someone who founded the business leaves and moves to another company. It's really tough to get someone who's spent hours, years of their life of building a company to leave that business, especially if they believe this company has a lot more success ahead of it. So, you know, it's one co-founder leaving, the other one's selling the business. The future for Pinterest as a standalone company doesn't look too strong from this perspective. So I don't know, it's all speculation on my behalf, but if you are a Pinterest shareholder, again, consider this, think about this, kind of reason for yourself why someone would do this, put yourself in Sharp's shoes, and determine for yourself whether this is a company that you want to continue holding, either standalone or as part of PayPal. So now, since I brought up PayPal, let's kind of move on a little bit here and let's talk about the market reaction to PayPal stock on this news release. We'll also spend a few minutes here looking at their financials and how their balance sheet would be affected if this deal closes. So that'll be an interesting point as well for PayPal shareholders. Now, the chart here for PayPal shows that the market is not happy with this news at all, as the stock has taken a nosedive since the announcement on strong volume, breaking through the 50-day moving average support on the weekly, which is usually a bearish sign. Now, that being said, the charts still overall look fine. This could be kind of a short-term blip where the stock reverses and moves higher once again. But this could also turn into a long-term consolidation period for PayPal until we get either more clarity on this deal, whether it's actually closing, when it's closing, or maybe the deal falls through and then PayPal bounces back up as investors are happy again that they're not buying Pinterest. To me, it's clear that investors are showing that they're not happy with this agreement here. They're selling off PayPal stock quite aggressively, and it's resulting in a lot of loss of value for this business currently. But now, looking past the stock price, what I think is more important to look at is the fundamentals, the balance sheet here for PayPal, and we need to understand how this move affects the company going forward. So as of June this year, PayPal had around $12 billion in cash on their balance sheet, along with around $40 billion in receivables, which they will see realized over the next year. And, on the top of this, they also have around $10.5 billion of goodwill. Looking at this, they have a strong asset breakdown, even if you subtract the goodwill away. Now, with liabilities, they have a lot of money owed in the next year, around $38.6 billion. And they also have around $9.5 billion of total long-term debt. So this puts their total liabilities at around $53 billion. So they have around $74 billion in assets. If you remove the goodwill, it's around $64 billion. And this compares to their liabilities around $53 billion. So they do have more assets than liabilities. That's a pretty good balance sheet. But now, if this deal closes and they buy out Pinterest for $45 billion, that would all of a sudden put their liabilities now close to $100 billion, around $98 billion. And that'll make it significantly more, around $30 billion more than their assets. This would turn their good balance sheet into a weaker balance sheet, as now there's concerns about servicing that debt that they raise, or, however they plan to approach it. And it looks like right now investors are assuming that they're going to dilute shares because they only have $12 billion in cash. So they need to fund this deal somehow. So there's going to be a lot of stock issued most likely. And of course, dilution is not something investors want to see. Here we can see, PayPal has been pretty good with lowering their share count in recent years, but this acquisition here will just kind of reset everything, send that number back up, and investors, it seems, do not like this possibility. And it's also worth noting that PayPal generates, anywhere between $5 and $6 billion in free cash flow per year, so they're not going to be able to pay down this debt for quite a while here for this acquisition. And when you look at a market here and you look at other fintech giants or other companies in general that are growing rapidly, that have stronger balance sheets, it's hard to make a case to put money into PayPal that arguably would have a weaker balance sheet once this closes. So in my opinion, this adds risk to an otherwise great business. This, could damper the future growth of Pinterest as well, because who knows if PayPal can run things as well as the business has in the past. One co-founder is left, the other one's selling out. We don't know if he's going to stay. So there's definitely a lot of doubt, a lot of question marks, a lot of skepticism on this deal. And that's why PayPal shares have been taking a nosedive. So if you're considering selling out of PayPal here on this news, it's not necessarily the worst decision, because fundamentally the company, in my opinion, does get weaker, and there's no really proven track record of PayPal entering some kind of social media space and stuff in the past, so we don't know if it's actually going to be a success here with Pinterest, and I think that just raises a lot of questions, a lot of doubt, and there's better places for your money instead. Anyways, guys, all in all, I'm not really interested in taking a position in either one of these stocks at this time. Maybe if the deal falls through and Pinterest drops back down to a much more reasonable price, I may consider going in. I'll be honest, I was starting to look into Pinterest in the last few months, was considering something. I kind of just said, okay, I'll just wait a bit here, put my money into Twitter instead because I think they have a better opportunity. But now with all of this, I'm just going to wait till things clear, see how this pans out, and make a decision going forward at that point. Now, with that being said, one last thing I want to say is that there is an opportunity here if you're looking for some arbitrage. Pinterest is trading anywhere between $61, $62, somewhere in that range at this time, and the deal is supposed to be for $70. So there's about an $8 to $9 delta here that could be realized from an arbitrage opportunity. The risk, of course, is that the deal could fall through, Pinterest could drop back down to the mid-50s, and you could be down in your position, but if you believe long-term in Pinterest, that could recover. And another risk could be that maybe PayPal lowers their bid here for Pinterest, maybe it goes down to 65. We don't really know how this is going to play out, but if you believe this deal will close and they'll actually pay $70 per share, there's a good amount of delta here to realize for this arbitrage opportunity. But anyways, guys, I hope this video was useful. Again, this is kind of the stuff that I look into and research regularly, so if you want to see more of these kind of videos on the channel, let me know in the comments below. I'd be more than happy to create those for you guys. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.